After winning its antitrust case against Google, the U.S. government is considering asking the judge now to break up the company. But little does the judge know, the sum of the parts will definitely be worth more than Google as a whole. Why do I say that? Well, they have multiple businesses that alone would be worth billions of dollars in market cap. Let's get into some of the businesses that Google runs before we continue with the charts. So Google's largest business is Google Search, which represents about 60% of revenue last quarter. Google is the dominant player in search, and nothing the government does will likely change that. Now, there is talk of AI ruining Google's dominancy this decade, but check this out. While some investors worry about the impact of AI on search, Google is still likely to be the winner, given its long history of search data, scale, and availability to monetize its ads. In fact, AI should give it the opportunity to monetize a large portion of the search results it currently does not serve ads for, which is about 80%, as it introduces new ad formats to profit from AI. Now, you also have YouTube. YouTube is the second largest search engine in the world. Many probably didn't know that. YouTube has become one of the most successful video platforms on the planet. Google reported nearly $8.7 billion in ad revenue from the platform in the second quarter. That was up 13%. However, YouTube also generates revenue from subscriptions, which is included in a line item called Google Subscriptions, Platforms, and Devices. They're also getting into the sports business. It paid $14 billion for the rights to the NFL Sunday Ticket over the next 7 years, although the NFL losing an antitrust suit does put the deal at some risk. Now, it's all about the cloud. Google Cloud is Alphabet's fastest growing business as it benefits from customers looking to build out their AI capabilities on its platform. Its revenue soared 30% to more than $10 billion in the second quarter, while its operating income went from $395 million to nearly $1.2 billion. This is a high fixed cost business that has recently reached the scale to see profitability start to soar. Currently, there is no standalone cloud computing stocks, but this business would undoubtedly receive a very large multiple if it were to be separated out, given its growth. And then you have Waymo. Now, Google's bet on self-driving cars and robo-taxi, Waymo has gone out to a huge lead on the competition as a company currently offering robo-taxi services in the U.S. The company recently increased its number of paid riders per week from 50,000 to 100,000. However, standalone Waymo would likely get a pretty nice valuation, a la Tesla. It was last valued at $30 billion in 2020 when it took on some side investors. However, the valuation has likely gone up in recent years, especially now that it's the only robotaxi company operating in the country. Google is estimated to own over 80% of the company. All right, but those are scenarios. Right now, Google trades as one entity. And so this is the daily chart. We've had a rough last couple of weeks, and you can tell that from the stock price. Price was at 192 back in mid-July. We're now selling for 152. And currently we are respecting this daily downtrend line. So let's zoom out to the weekly. Before I do that, let's zoom out to the monthly because I just want to show you this monthly buy level. I really don't see price crashing all the way down to 120, but nevertheless, you have this base rally. Price came back, dipped its toes at the top of the zone, and then pushed higher. Now, this line denotes what was the previous highs or resistance, which should now serve as support. However, for the week, we did close below that level. Now, scrolling back out to the monthly chart, just want to put a line, a band right there, because I want to scroll down and I want to show you how you can put confluences on your side. So we had a gap here. That's an extended range green candle, basing candles, and then the leg out. So rally, base, rally, or leg in, base, leg out. But we didn't get that second consecutive extended range green candle. So this zone that I'm going to draw is not a high probability setup. However, the reason why I drew this band was to show you that what was support previously was resistance. So resistance should be now support. So we're going to mark that in anyway at 150. However, one cannot take this buy signal blindly. Scrolling down to the daily chart, you did form some daily sellers. But I want to zoom into the lower time frames. Let's go to the hour time frame. What you want to see ideally is price coming in, get that bounce, retest, pick up any remaining unfilled buy orders, and then the move higher. On the 1 hour chart, you keep forming sell levels. That worked out nicely. And then you have another one that formed in Friday's session. So what we need to see are 1 hour buy levels before we can consider even getting long. Rest assured, we are in the liquidity period, and so if you wanted to get into Google, now might be the opportunity to start scaling in. Thanks for watching. Subscribe. Please like the video.